silver was demonetized in the U.S. at $1.29 an ounce. It took till January of 1979 to reach $6 an ounce, and $6 an ounce 1 year later it was a $50 an ounce. Immediately one day, it was only a one-day $50 print, but nonetheless it did trade at that price, which is 8.5 times higher, and that took 1 year. So if you do the math, as I said, it comes out basically 90% of the move. It does not guarantee that this market will do that exactly, but it does infer strongly that the last leg up, as I just said, will be the strongest in price appreciation and probably will take the least amount of time.
In 1965, when silver was demonetized at $1.29 an ounce, it took until January 1979 to reach $6 an ounce. Within a year, it surged to $50, an eightfold increase. This rapid rise suggests that the final stage of a silver price rally sees the most substantial gains in the shortest time. Recent technical analysis indicates that silver prices are breaking out of key resistance levels, confirming gold's upward trends. Analysts suggest that silver may experience a significant rally if this momentum continues, similar to gold's recent performance. The speaker emphasizes that silver has historically been the money of the people, but it has been largely dismissed as an industrial metal in the last couple of decades. Despite this, silver is legally recognized as money, and older silver coins hold much more value than their face worth due to their silver content. While spending such coins in everyday transactions would make no economic sense, they highlight how silver retains intrinsic value. The speaker also notes the importance of silver confirming gold's movements, as a strong gold market without silver's participation is concerning. The speaker, David Morgan, a well-known analyst and commentator in the precious metals space, particularly focusing on silver and gold, believes we are in the final leg of a precious metals bull market, where silver's price could rise rapidly. Historically, silver has been known for its extreme price volatility, moving sharply up or down, which can scare investors. Though typically short, this phase is characterized by significant price appreciation, with most gains occurring in a brief period. Investors must stay patient and understand that silver markets can be unpredictable but are poised for major moves. Stick around for the full video, and if you find it helpful, like and subscribe. We're excited to see more of you joining our community, with only 20% subscribed. Help us hit that 1,000 milestone.
Silver really is the money of the people and has been for eons. But I'd say in the last 10 years, maybe even 20, silver has been put off as an industrial metal only pretty much. I mean, you hear a lot of young guys and gals say, silver isn't money and blah, 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 blah. And in a way, the argument's really not that tough. Legally, silver is money. It's a legal fact. I mean, I could prove it in court of law and I don't want to take time, but I could take 4 1964 quarters, walk into a store, and what you get for $1 these days, half a pack of gum or something, some penny candy for $1, and they would have to accept it. In fact, most people probably wouldn't even notice they were silver quarters. They might notice they were old, stick them in the cash register. But economically, it's not, because why would I spend something that's worth $2.50, 10 times the face value, so that dollar is worth 10 or whatever, or more than that, maybe 20. I'm not doing it in my head today, but significantly higher by many multiples for something that costs $1. Why would I spend something of fiat value that was, say, several times as great? So economically, it's really coming back on point. I always look for silver to confirm gold's move. It always concerns me when we don't see silver and gold not moving daily together, but when you have a very strong gold market and silver isn't participating, that gives me pause. And we're now seeing it take place. So there's very little upside resistance beyond 33, as many people have stated. It's a fact. And, we're going to get to 50 this year. I highly doubt it. Will we see 40 this year? I don't know. What I do know, I started trading futures and got so much into the hard money, sound money camp and been there my whole life, basically, my whole adult life. One of my first brokers said, nothing moves like silver and soybeans. Not that you need that comment, but the idea being that they can move very rapidly. And this is true. And so it can just, as I said and coined the adage many years ago on Financial Sense News Hour, silver will scare you out or wear you. And scare you out is like if you're in a leveraged position and you're long and if you're long and it goes short or it drops rapidly, it'll scare the heck out of you. And if you're on the other side, it does the opposite, it'll scare you. And then then it could just do nothing for a very long time or slowly grind out like we've seen so many times. So people just get fed up, I'm doing this. And that has to do with kind of an investment attitude and buying too much, buying the wrong kind or buying the wrong time, or not taking a long-term view or really understanding what these markets are about. But we are in a new era. We are in what I consider the third and final leg up in the precious metals. This is the leg that lasts. Actually, the duration is not that long usually, but the price appreciation is phenomenal. And this is where you get that adage that, actually Jeff Christian mentioned it to me many, many years ago, 90% of the move comes in the last 10% of the time.
The speaker, David Morgan, explains that although gold has increased nearly tenfold in value since the year 2000, this reflects preserving purchasing power rather than making a significant profit. The increasing money supply has eroded the currency's value, making gold an essential component of a well-balanced portfolio. Studies have shown that owning 10 to 25% of gold in a portfolio can maximize performance while minimizing risk. But many financial planners fail to educate clients on this. The speaker stresses the importance of diversification and argues that gold helps hedge against stock market declines and bond market volatility. Additionally, David highlights that most wealth managers are undereducated about money and its role in economic systems. They encourage starting small dollar-cost averaging and finding the right balance of precious metals in one's portfolio. While some may choose to be heavily invested in metals, as many of the speaker's followers are, the key is finding the right balance that works for each individual's financial goals and risk tolerance. Let's get back to the interview.
In terms of paper versus metal, you are actually buying gold today in today's value of $1, very similar to what you were buying in the year 2000 because the money supply has gone up that 10. And so to tell someone, well, David bought his gold at, 300 and, now it's almost 10 times as much. Wow, he's made a killing. Actually, I've preserved my purchasing power and I have not made a killing. But that's an extremely hard concept. But to get the one, and I've had I'll call it an argument. I've had discussions, heated ones at times, with certified financial planners. I did work for one early on in my finance career, but the best studies in the world will show you on portfolio analysis that you must, and the word is must, own gold in your portfolio if you want maximum performance. And everybody wants maximum performance. And not only do you want maximum performance, you want maximum performance with the least amount of risk. Ibbotson and Associates did a study. I was funded by BMG Group, my dear friend Nick Beresheff, who's no longer with us, and the number's 15%. Jeff Christian of CPM Group did it from 1968 on, and the number was 25%. And people like me recommend about 10%. And that goes back to what I said earlier about, people buy too much, buy the wrong kind, or jump in all at once or whatever. But really, it's been proven time and time again. And there could be a day when some of their clients lose a great deal of money in the stock market, and they listen to a show like yours and say, my goodness, if I would have had 25% in gold, I'd be in the positive right now, even though the stock market took a massive fly. Or, the bond portfolio got wrecked because of interest rate fluctuations. But if I had gold in my portfolio, I'd be even or whatever. And this saddens me that, that level of, money management or whatever you want to call wealth managers, all these terms that they use are basically stockbrokers in most cases. So I'm not against stocks, but point being is that they are undereducated as far as money, what it is, how it works, and what happens to it when you make too much. There's a lot of everything. It usually has low value. If there's a lot of yellow dresses at the women's dress shop, no one's buying them. They're going to discount them. They're going to put them on sale and try to move product because there's so many of them. It's the same in economics. So I think I answered. The last one I want to say is I wrote a 10-pointed one-pager called 10 Rules of Silver Investing, and that's on the web. You can type in David Morgan 10 Rules of Silver Investing. It applies to gold as well. And those 10 rules will keep you out of trouble. And I'll go through every one of them, but it talks about starting small. In other words, don't jump in all at once. It talks about dollar cost averaging. It talks about buying the right amount. Okay, and it was try to be pithy. Like cough medicine, too much, right? You need the right amount to get over your cold. So you need the right amount of precious metals to balance out and have a happy life. To me, and I don't like calling it insurance, call it that. I really don't care too much about out what you name it. But the idea is to have balance in your life. Like you overeat, you're going to get fat. You undereat, you're going to be malnourished. Where's that happy point? And that's the same thing with precious metals investment. I am certainly overweighted in the metals, as most people that follow my work are, but that's a choice, and I'm not going to tell someone they can't, make their own free will and make choice on, what kind of, portfolio makeup they want.
The speaker argues that silver and gold are vital to a sound investment strategy, especially in today's inflationary environment. While silver is often overlooked in favor of its industrial uses, its historical significance as the money of the people and its legal status as money underscore its intrinsic value. With a potential bullish phase ahead for precious metals, investors are encouraged to remain patient and strategically incorporate these assets into their portfolios for optimal risk management and performance. What specific factors could trigger the anticipated surge in silver prices during this final leg of the precious metals bull market? What are your opinions on this current scenario? Please comment below and let us know what you think. If you found this video helpful, please like it and subscribe for more. We're grateful to have you with us on this journey.